Hello, everybody, and welcome to ASNAHA's August education session. I'm Zach Shaw, ASNAHA's board president. Thank you for joining us today. A couple of announcements. You all will be muted to avoid noise disruptions during the session. We will have a Q&A session at the end of the main presentation, and you may send your questions at any time using the Zoom chat function. That or hold on to them until we are open for Q&A, at which time we will unmute everyone. We are recording the session and it will be posted on our website for future reference. We're going to start today's session with a quick overview from our associate member, Jana Johnson, account executive with AlayaCare. She has been in the home care space for several years now and is passionate and eager to help home care agencies achieve success and reach their goals through technology. Jana, welcome and take it away.
Thank you so much, Zach and Linda, for having me. Let me just share my screen here. Okay, perfect. So again, thanks for the intro. I'm Jana Johnson with AlayaCare. I actually recently joined AlayaCare. However, I've been in the industry for a few years. Like Zach said, I'm passionate about helping agencies grow, succeed, consolidate operations into one system, get rid of manual processes, paperwork, things of that nature. Prior to AlayaCare, I actually worked at another health tech company that served a much more narrow market, right? And simply put, I wanted to help more agencies, right? And work with a company that served a much broader spectrum of agencies and solve more problems, right? So just at a high level about AlayaCare, we're an end-to-end home health system that really encompasses the whole care continuum, starting with, as you can see in this awesome diagram here, starting with the referrals and intake, right? And then ending with the data exploration and reporting. So then you have what happens in between, right? And that's the HR aspect, the digital scheduling, the clinical health record functioning as your full EMR, EHR, point of care, mobile and telephony. And this is your EVV. Caregivers, they can clock in right on their shift. They can clock in, clock out in the mobile app. It's all GPS tracked. And then there's the shift approval and visit verification process. So this is a proactive approach to essentially make sure that all visits are clean before pushing them through to billing and payroll. So everything's rectified beforehand, so it's a smooth process. Couple more things I want to mention. AlayaCare has Hipaa compliant secure messaging. This is actually a newer feature, really excited about it. It minimizes data security risks, right? Enhances care team efficiencies and increases collaboration amongst team members, right? So lastly, I want to mention is the AlayaCare connector, which enables you to automate more workflows. Agencies can tackle simple or really complex workflows with the AlayaCare connector without losing efficiency, right? Examples might include visit cancellation, SMS notifications, the automated permissions updates, applicant tracking, etc. So this is a really useful tool. So lastly, just to finish on who AlayaCare is, we have 10 offices worldwide. We're growing really rapidly. We're the #1 provider in Canada and Australia. About 80 to 90% of all those agencies are on AlayaCare. And then in the past 5 years and moving forward, there's been a focus on the States, which I'm really excited about. We have over 650 employees now. And from an agency perspective, you might wonder, okay, like, why is that important to me? Why is that relevant? Well, it is when you think about the servant support that's needed for implementation, during or post-implementation, ongoing support, right? So the point is we have a very strong infrastructure for our clients to get them the support they need and deserve. There's also on the product side, many developers, engineers, right? And this speaks to the R&D investment of over 46 million that goes right back into product to make sure we remain as competitive as possible. So again, thank you for having me here to introduce AlayaCare. We're going fast, growing fast, and we want to partner with other fast-growing agencies with this same mindset. So just want to leave my info here. I'd love to connect and let's have a conversation. Thanks again, Zach and Linda.
Thank you, Jana, and thank you, AlayaCare. Obviously, we appreciate your support and everything that you do for our ASNAHA members and can't thank you enough. So thank you for joining us again today. We appreciate it. Our featured speaker today, unfortunately, had to cancel due to an unexpected death in the family. But we fortunately do have another great member, Dennis Powers with Inszone, who is going to share with us today. Dennis, for over 17 years, Mr. Powers has been in the insurance industry, beginning his career as a private investigator, specializing in investigating fraudulent insurance claims against employers. He then spent over 10 years prior to becoming an insurance agent, working as a multi-line claims adjuster with a primary focus on workers' compensation claims. Currently, he is an insurance agent working with small to middle market businesses and is a graduate of Western Illinois with a degree in criminal justice. In addition, he has attained his associate in risk management, associate in claims, and is a senior claims law associate, and has just completed the requirements for the Charter Property Casualty Underwriter Program. Dennis is specialized in the design, marketing, and implementation of a client-oriented insurance program, and also provides an expertise in applying the appropriate resources to help his clients contain costs by managing their exposure to risk. His clients include manufacturers, social service agencies, distributors, contractors, and other companies. And with that, Mr. Powers, I'd like to hand it over to you to take it away.
Great. I laugh, Zach, because that bio is so old. I wrote an article for a franchising magazine. I think it was in 2012, but we're doing this short notice, me speaking. So what can I grab to get Zach with an introduction? So I'm all in with home healthcare, by the way. So I need to hit the share screen, right, Zach?
Yeah, and I think Linda has that control if she needs to give it to you.
Let's see here. I think, can you all see the presentation?
Yes.
So I gotta click on start slideshow. Okay, so you can see it okay and hear me okay? Great. By the way, this is the first time I'm doing this new version of the presentation because we used to be Lamb Little up until December of last year. We sold / merged with Inszone out of California back in December. So I am an insurance agent. I went all in with home health care back in 2011. I mentioned a couple of you earlier. I wanted to be a police officer. I ended up taking a paid internship as a private investigator. All I did and saw was work comp fraud. So I drove around the country in a van, usually in the East and Southeast. And almost everyone I watched was faking some kind of injury. This is back in, I'm 50. This was back in 1993. So I had 2 job offers on the table. One was to work investigating claims. Then the other one was to work undercover at Motorola and bounce around from location to location and look for theft and drug use and be a rat. I took the safer 40-hour-a-week, I thought, job as a claim adjuster, and I did that throughout the 90s. So I handled workers' comp, I've handled liability, I've handled auto, but I am a salesperson. And I met my first home health care account in 2010 doing this exact presentation. Just looks a little different. Now it shows Inszone on there. And I brought Gary. Oh, they got our names mixed up, by the way. I'm Dennis Powers on the right. The more handsome guy on the left is Gary Kalina. Okay, so I'll try to make this a quicker presentation than normal and hit the highlights. Again, we're doing this on short notice, so thanks for letting me do this, Zach. The takeaways I want from the overall presentation, which is usually an hour long, is understanding your experience rating, understanding how that impacts your work comp premiums, because for most of you on this call, workers' comp could be your number 2, number 3 price point. I mean, it's tied in with payroll. So your payroll and then probably your workers' comp. It usually seems to fall in that order. So it's important to understand you have some control over those costs and how can you keep those costs lower. We're going to talk about why it's important to report all your claims. Don't pay those out of your own pocket, and why it's so important to correctly report your claims to insurance companies. So we'll get into it, but really quickly, I would assume most of you on this call are in a guaranteed cost program. So let me explain what a loss sensitive program is first, and I'll explain guaranteed cost. Loss sensitive programs, we're talking a big employer like a McDonald's or UPS. They're not going to have a traditional insurance program. They're going to be self-insured. They're going to have high deductibles. Every client I have is guaranteed cost. And what does that mean? that means you're paying premiums to the insurance carrier. In return, they're going to cover your claims. So, the good thing about that is it's a fixed cost. So let's say Zach pays 50 grand a year for his workers' comp. If he has $2 million worth of claims, he's only on the hook for 50,000. However, if he has 0 claims, he's not going to get a refund. They're going to keep that they're going to gladly keep that $50,000. But the negative about that type of program is once, and again, for your industry, there's not every insurance carrier wants to insure home health care, whether you're skilled or unskilled, companion care or true home health care, hospice or whatnot. So you only have so many work comp carriers. So if one of them says, you know what, we're taking a beating on work comp claims, we need to raise our rates. Let's say Travelers, even though Travelers doesn't do this, insure this class, other insurance carriers will notice that Travelers is taking increases. They'll do the same. So you'll notice that they'll, I've noticed that the rates have been going down, but eventually they're going to bottom out and start going up again. So let's talk about the 3 factors that really drive your premiums. It's the way you're classified in your rates, your experience rating, and whether or not an insurance carrier can get to the price point that they want to earn your business by either adding credits to reduce the premiums or sometimes debits to get to a premium that they're comfortable with. The ultimate goal is they want to have enough money collected in premiums to cover your losses. So the way this presentation, when I first did it, was for manufacturing. And in 2010, I had one owner of a home instead franchise, and I'm from Chicago, by the way, come to a presentation I did. I didn't know anything about your industry. I was just getting in front of groups of people, and it was a manufacturing example. But I started to gain momentum with Home Instead and other franchises, and I went all in where I do have manufacturing clients, but I do specialize in home healthcare. So this class code 8835 is the same class code in Arizona as it is in Illinois, as it is in Georgia. And generally, I think in about probably close to 40 states, they use 8835. But if you're a manufacturer, if you're a contractor, if you're a retail shop or home healthcare, office is 8810. It's universal, same rate. So it's not, your rate's not going to be different for your office workers for home healthcare as it would be for a contractor. It's going to be the same. What differentiates you from a contractor, distributor is the rate that's applied to the 8835 class code. So there's a definition that goes along with that. And a lot of people think, I say most of my clients I have some home health care, skilled care, but most are non-medical companion care. But they share the same class code and usually the same rates. So when I was first doing this, most insurance carriers wanted skilled care. They figured someone who's educated and skilled is less likely to have an injury, which actually was not true. But it was the same class code, same rate. What I have noticed in Delaware and Pennsylvania and New York, they actually have different class codes, not even 8835, but they do have separate class codes for skilled and non-skilled. And in Delaware, the rate for skilled care is half the rate of what non-skilled care is. So it's, kind of be careful what you wish for, because you don't want to pay a higher rate. You don't want to separate from home health care if it's going to be a lower rate with skilled care. So you want to be lumped in with them. But when you did an audit, and especially during COVID, I have noticed, because of staffing, when I was down at the conference in March, that first speaker, I remember him giving the example of someone working for, I think, Amazon, making a little bit more money versus working in your industry and having to take care of a senior and wipe their, I remember he said wipe their butt, I think. I saw, people with the staffing issues, owners actually get out there and caregive out of desperation. It's staffing issues. If your payroll is included on your work comp policy, which I do recommend, by the way, but if you did any kind of caregiving, 100% of your payroll is going to be classified as caregivers, but normally it would be office or maybe marketing. So it's important to understand where your payrolls fit in with those three. Those are the three class codes I always see. Heavy with the 8835, and you see there's a rate, for that class code, which this is an old example, $5.02. Your rates in Arizona are pretty low. I think they're under $2. But in California, at one point it was $15 for every $100 of payroll, and now it's down. I think it's under 10 now. And in New York, the rates were about $5 or $6. I mean, double, triple what yours are. So just so you all know, Arizona is a good state for lower work comp rates. So why is it important to understand all of this? Is because when you get audited, you want to make sure your payrolls are in the right buckets. How your premiums calculated, at the beginning of the year, your agent's going to say, hey, what do you think, forecast what you think your payrolls are going to be for the upcoming year. And so in this case, the exposure is a payroll. This person said, we think it's going to be $1 million of caregiver payroll. They don't include bonuses, overtime. It's pretty straight payroll. And they multiply that by the rate, divided by 100. And then here you come up with your manual premium. That's your starting point. The important part of this slide is to understand in Arizona, every insurance carrier has different rates. So what I do, I've got a lot of clients in Arizona. It's a big reason why I joined the association. Some of my clients are members of this association. In Wisconsin, Florida, and Massachusetts, every insurance carrier has to use the same rates. So there's no competitive advantage. It's really based upon who's willing to insure. Maybe they could put a dividend on, but in Arizona, Illinois, and most other states, you probably have, I would say in Arizona, there's probably 7 or 8 work comp carriers that will insure your class of business. They all have different rates, and they all vary and fluctuate from year to year. One year, AmTrust might be the lowest, but then they might have a lot of claims. They might raise their rates. So for me, my first client of the year that renews in January, I test the waters and I call my carriers, what are the best rates in Arizona? And I try to use that model. And I don't try to move people every year. I just try to negotiate with the work comp carrier for the best rates. So let's talk about the experience rating really quick. It's really important for you to understand. My 2 biggest takeaways come from this part of the presentation. The idea behind you see the manual premium, that's your baseline where you start. And again, if it's a different rate, it could be lower, it could be higher. So it's important to know what the best rate is. But now you see the experience rating and experience modifier is a multiplier that in this case is raising the premium 17%. I've had 3 clients that have had a EMOD, I call it an EMOD, over a 2.00. They're paying more than twice they should be for their workers' comp. The lowest I've seen for your industry is a 0.71. That means they're getting a 29% credit. So every insurance carrier, the first thing they ask for is your experience rating worksheet. It tells a story. So let's look at this. You've all probably seen this. If you're handling your work comp, you've all probably seen this before. So what I like to say is it's a snapshot. And the whole theory behind the experience rating is, let's have a system in place that's going to reward those employers that are going to do 2 things. They're going to do safety training. They're going to try to have a safe work environment. They're going to try to prevent injuries from happening. That's one thing. The other thing is they're going to make an effort to bring back an injured caregiver that has restrictions. And if they do these 2 things, they're going to have less claims. But when they have a claim, they're going to be able to bring this person back to some kind of work, rather than have them sit on the couch eating bonbons and watching Ellen all day long and then seeing the law firm commercials. If you're doing those 2 things, your experience rating should be under 1.00. You'll be rewarded with a credit. Okay. On the flip side of that argument, unfortunately I've met quite a few owners that, listen, I can't get involved in that stuff. I can't take anyone back. And it is challenging to bring someone back to work as a caregiver when they have restrictions. But I want to run my business. I want to grow my business. I don't want to be having my caregivers sit through safety videos, come into the office for safety training. I got to pay them to come in. I'm taking them away from their clients. Totally get it. But the reality is, if you're not doing those things, you're probably going to have claims and your experience rating is going to be over 1.00. And again, this is the first thing an underwriter looks for because it tells a story. And what it shows is it doesn't show your current year. So when you have a claim, the first year of the claim, it's not going to be on your experience rating. It's going to be on year 2, year 3, year 4, then it's going to drop off. The reason it's not on year 1 is because the claim hasn't fully matured. Reserves are going to go up and down, up and down. By the end of year 1, the claim's probably pretty stable, and all that data is sent in to NCCI, and then they calculate your experience rating using the data year 2, year 3, year 4. So if you look at this experience rating worksheet, if you could see it, I'll kind of draw a line down the middle without knowing how to draw a line on this presentation. The whole left side, if you see EXP, expected primary losses, the whole left side is where NCCI is doing the calculation of what your losses should look like based upon your audited payrolls. So when you do the audit at the end of the year, it kind of trues up what your actual premiums should have been. You might get a refund, you might owe more money. Hopefully you owe more money, that means you grew. That's a good sign, okay? They take your audited payrolls, and based upon that, they figure out what your losses should look like for your industry in Arizona. The whole right side of this is your actual losses. Okay, so if you look at the bottom here where the cursor is, the top line is your actual claims, and the bottom line is what your expected losses are. They do the calculation of that, and at the bottom here, 1.17 is your experience rating. That's how they come up with it. Okay, here are the 2 important takeaways. I had mentioned earlier, it's important to pay to report the small claims, and I'll explain that in a second. It's also really important to understand what the waiting period is in Arizona. If you give me 1 second, I think I've got another slide. And I want to show you, it's really important to understand. Where is it? Here it is, right here. Come on, open slower. Here we go. Okay. So I have this little cheat sheet. By the way, I'm happy to send anything from this presentation to any of you that ask for it. In Arizona, there's a 7-day waiting period before an injured worker it can get paid for lost wages. In Illinois, it's 3 days. It's usually 3 days or 7 days. And if you see this, it says retroactively paid if disability lasts at least 14 days. So the theory behind this is it's meant to discourage fraud. It's meant to discourage workers from taking vacations on your dime. It's so easy for any injured worker to go into a doctor's office and say, I sprained my back, and get written off of work for 3 days or for 8 days, and then take a vacation on your dime. So I think, oh, and by the way, I'm seeing questions pop up. I do want to try to answer that too. So give me a second. Let me finish this thought and I'll answer some questions. So it's important to understand that neither you nor the insurance company have to pay those first 7 days, okay? And this is why, this is takeaway number 1, and it is super duper important, okay? Let me move this away now that I've shown this to you, okay? If you look at the bottom of this experience rating worksheet, rating reflects a decrease of 70% medical only. That means if you have a claim that's medical only where someone's not losing time from work, that claim is going to be discounted by 70% in terms of the impact it has on your experience rating. Too many people have a knee-jerk reaction when they're filling out the Arizona first report of injury and the question's asked, is this a lost workday case? The knee-jerk reaction would be, well, the person missed 5 days of work, so yeah, I guess I answer yes. Well, the minute you send that claim in and answer yes, you lose that 70% discount, okay? Very important takeaway, because once that claim's on there as an indemnity claim, it's on there for 3 years. So properly reporting that claim is the right way to go. So now that you all know that 7-day waiting period, report that those claims as medical only if they're going to lose less than 7 days of work. Okay. But then the next question might be, well, what happens if they're going to be off work for more than 7 days? Simple. Call the insurance company. They'll reassign the claim to a different adjuster. They'll recode it. So then you will lose that discount, but they can flip that switch and move it over to someone else. You cannot go backwards. You cannot ask the insurance company, whoops, I reported this wrong. They only missed 3 days of work. They're not going to reclassify it to medical only. That's takeaway number one. But then it answers takeaway number two. Should I pay those small bills? Well, now you know that $1,000 bill is only going to be a $300 hit against your experience rating. So report those claims. It's just you're throwing money away if you're doing that. I'll give you a great example really quick, and I'll try to answer these questions. I had a manufacturing client, a small screw manufacturer. The guy cut his finger. It went down to the bone. Went to the clinic. They did an X-ray. $1,800 bill because of the X-ray. They wanted to see if there was any damage to the bone or tendons or whatnot. She paid that bill. She came to a seminar I did, and she became a client. And I showed her, had we reported that claim to the experience, and it would have been on your experience rating, she paid $1,800 out of pocket. Had she reported the claim, it would have been a $100 additional premium each of the 3 years that claim was going to be on experience rating. So it will only cost her $300 more premiums in the 3-year period versus the $1,800 she paid out of pocket. So, okay, so let me see some of these questions really quick. What top 3 things can an agency do to protect them from premium hikes? So, and what type of safety training or protocols do you see as most effective? If an agency has, it's all from one person. If an agency has a high premium due to high amount of claims, how long will it take to get a more favorable premium, and what steps should they follow? So again, now you know that these claims are going to be on there for 3 years. So prevention is important. I'm talking to you from Chicago, where from November until March, I cringe because the problem we have in the Midwest and the Northeast is we have caregivers taking the garbage out during an ice storm, or slipping on the client's driveway. What I see here is I see so many slip and fall claims in the winter, fractured kneecap, broken ankle, things like that. That's not an issue for you. I mean, loss prevention, loss control is really difficult for your industry, because again, you got to take your caregivers out of the client's house, bring them into your office, have them watch videos. I mean, you've got Hoyer lifts. The second biggest claim I would see is back claims from helping a client off a toilet, out of the shower, from falling. I just had a conversation with someone yesterday. I think some people don't allow their caregivers to try to stop someone from falling. I've heard that before. And if it does happen, then they have to call 911 and have someone come and assist getting the client back up. So I know that's a common practice, because you're putting your caregiver at risk. I don't know what the right answer is for that, but I just know that I've got 175 clients that do what you do. I could probably count on these 10 fingers how many actually would watch videos I would send them. So I think the biggest thing is your ability to bring someone back to work. Okay, that's the number one issue with your industry, what insurance carriers want to see. If you have one big claim on your experience rating and you're surrounded by good years, they're not going to put too much weight on that one claim. If you've got frequency, though, where you show a lot of lost time claims, that doesn't look good to an insurance underwriter. So I kind of hope I answered this question a little bit. I think that was a couple questions in one. So I think this is being recorded. So I'm going to skip over this is really technical deep dive into the weeds about the experience rating. I want to get to some other stuff really quick, but it's just super important to understand how you report the claims and then not paying those small ones. But also it's important, let me get to loss runs here. These are loss runs. If you look at that experience rating, it shows your claim number and it shows the total incurred. The takeaway from this is when they do your experience rating, they don't count expenses towards your experience rating. They count indemnity and medical reserves. Indemnity would be if someone's losing time from work. They call it temporary total disability, or they might have a permanent injury. They call it, that would be a settlement. That would be permanent partial disability. That would fall under indemnity, and then medical is what it is, paying for medical bills. But retraining someone for another job, legal expenses, expenses like hiring someone like me to do surveillance, those three things do not impact your experience rating. So don't worry if your insurance adjusters dug their heels in and are going to fight a claim and they're spending $50,000 to defend you. That won't affect your experience rating. Now, an underwriter from an insurance company might say, hey, boy, we spent a lot of money in this claim. We need to get some kind of increase, but it won't impact your experience rating. But this loss run, it's important for you to get these once in a while, at least once a year. And I'll tell you exactly when a little bit later in the presentation, because you want to have the claims under control, the reserves down as low as they can. And I'll explain that in a little bit. So let me keep going here. Get involved. I advocate for my clients. I mean, if I've got a client who calls me, first of all, let me back up. Agents usually don't find out about work comp claims. We don't get notifications all the time. So the assumption would be that if you turn in a work comp claim, me or your insurance agent knows about it. To everyone's defense, we usually don't. Okay, but when a client does bring to my attention, hey, this is a questionable claim, we don't believe it happened, or something's not right with this. What I do now, and have been doing for the last 6 months, get the claim turned in, you turn the claim in, and then we get a claim number, we get the adjuster will make their calls, okay? And then I will have a call set up a week later where it will be me, it will be the claim adjuster, it will be you, and we're all getting on the same page. We have a plan of attack. Then we have an email chain. Everyone's held accountable, not me, but you and the insurance adjuster for doing your parts. And we can just keep going back to that email. Give me an update, or you as the employer, hey, so-and-so came in with a new doctor's note. They can't lift more than 25 pounds. So that's what I've been doing. I get my clients involved with their claims so they know what's going on. There's nothing worse than only hearing from an adjuster once or twice, and then a year later find out the claim was settled. You had no idea that was happening. And then all of a sudden your premiums go up. And utilize loss control. Most insurance carriers are going to have some online resources. Nothing really sexy, but they're there. And I will tell you, if you could prove that you're actually doing things, I would take that information to an underwriter from an insurance company and say, hey, listen, let's add some credits because these people are trying to prevent these claims from happening. So again, kind of bringing us back to scheduled credit. In your industry, I don't see a lot of aggressiveness here with credits. It's usually your premiums are really dictated based upon the rates. But one of my competitors that has their own program, what they're notorious for is sneaking in a debit right here, 10%, 25%. So you look at the rate like, oh, it's a competitive rate. But what you don't see is that they've built in some debit additional premium. So always look for that. The only good reason for a debit is if you have some big claims and it's the only way for the insurance carrier to get to a premium that they're comfortable with. They can use a different rate, a higher rate, and they can apply debits. If you're best in class and you're doing everything right and you're taking people back to work, they might put a 10% credit on. I've seen maybe as high as 25%, but that's not common, but it can happen. So that's kind of the first half of the presentation. I want to, any more questions? Because there's a second part of it, the most important part of the presentation. Any more questions? I think it would pop up in the chat. feature. So really quickly, I'll try to get you guys done in the next 3 hours. Kidding. Let me kind of fly through this because I actually have to leave in about 20 minutes. Again, I didn't know I was speaking today, so I thought I was going to be just a visitor. And I'd had 5 Diet Cokes at lunch before I got here. So my bladder might dictate when I end the presentation. So being a claim adjuster, it was really important. I talked to some injured workers who ended up getting attorneys. And after the claim settled, I talked to a bunch of them. This is decades ago. You know, hey, things are going well between me and you. I was paying you timely. Why'd you get an attorney? And they would say, well, I was scared, or someone didn't pay me for 3 days because I was off of work. So it's important to understand, for you to understand the basic benefits. And again, there's this little cheat sheet here. I'm happy to send to all of you. And if you Google Arizona Workers' Compensation Commission, there should be a website that you can go on and get more information. And whoever at your organization is responsible for dealing with the injured worker, very important for them to understand the basics. There's going to be an accident investigation kit we'll talk about. We'll talk about why the return to work program is so important. We'll talk about post-offer medical questionnaire. I'm going to go a little faster. And again, I have a recording of this presentation. It's a little bit longer. I can email to anybody if they want it, or send a flash. Actually, I can send a flash drive with recordings of both presentations that we do for the Home Care Association, but also everything you're going to see in the second half of this presentation. When to do claim reviews, nurse triage, and then workers being injured on the way to work, on the way home from work, before they clock in, after they clock out, why it's important. Okay, so let me spend like 3 minutes on this slide. If you understand all of these things and you could talk to an injured worker and explain to them, this is what you're going to hear from the claim adjuster when they call you. They're not going to be afraid like the people I talked to were. They know they're going to get a call from a claim adjuster within 24 to 48 hours. They know that they're not going to have any co-insurance or co-payments, that all the medical bills are paid 100%. They know that temporary total disability is there to protect them if they're going to lose time from work. So temporary total disability is, Zach, I'm going to keep picking on you, or I'll pick on Linda. I'll pick on Linda this time. Linda has a worker who's injured, is going to lose a month's worth of work. The claim adjuster is going to say, hey, Linda, please send me 52 weeks worth of wages. And then they're going to add all 52 weeks up, divide that, and they're going to come up with what they call an average weekly wage. Then they're going to take 2/3 of that, not taxed, and they're going to pay the injured worker 2/3 of the average weekly wage while they're off of work. So if they understand that, they understand there's going to be money coming in from the insurance company, not from you. Now, I had mentioned return to work and why it's important to make an effort to bring someone back to work. A lot of people I talk to don't understand that it doesn't have to be all or nothing, okay? There's going to be times when a worker just cannot come back to work. Maybe they can't drive because they have a bad injury, so they can't even get to work. They just really they can't lift more than 5 pounds. That's going to happen sometimes. But a lot of times they're going to have light restrictions, no standing for more than an hour, no lifting over 25 pounds. If you can accommodate, here's what you need to understand. There's another thing called temporary partial disability. It works like temporary total disability, but here's what it does. So Linda takes this worker back to work. She was making $20 an hour as a caregiver, and she was working 40 hours. So she was making $800 a week. Well, Linda's like, you know what? I can't bring her back to her client because of the restrictions, but I could bring her in the office to answer phones. I could bring her to another client and she can be a caregiver assistant, but I don't want to pay her $20 an hour and I can only provide 20 hours a week. So temporary partial disability, how that works is it bridges the gap between the pre-injury wage and then the new wage if Linda chooses to pay $15 an hour and can only or lesser hours a week. So keep that in mind. The whole goal is Do not let that employee lay on that couch and get comfortable being off of work. You want them motivated to come back to work. Very important. And again, it's 2/3 the difference between pre-injury and post-injury wages. And if you've got people having money taken out of their check for health insurance, 401k, just so you know, the insurance company does not get involved in that. It's strictly a check for 2/3 of the average weekly wage, no taxes, nothing, okay? Permanent partial disability, that would be if your worker's injured to the point where the doctor feels like, you know what, that person tore their labrum in their shoulder when they fell, put their hands out to brace their fall, and they're only 80% where they were before they got hurt. They're going to get a 20% impairment rating. It's a settlement. So these bottom two fall under indemnity. When you get involved with these two, you lose that 70% discount. And lastly, penalties. You as an employer can be penalized if you sit on a claim and don't report it in a timely fashion, and your worker is not getting paid lost wages or bills aren't being paid. A claim adjuster can also be fined if they're in bad faith not paying benefits to the worker without justification. So again, Arizona Workers' Compensation Commission and this cheat sheet just have one person designated to be the person who talks to the injured worker and know the basics. In fact, in Illinois, you could print out the handbook in Illinois. It's in Spanish and English, maybe even Polish. And it's always good to have in a drawer that you can refer to if you're talking to the injured worker. And they can go on the website too and look at it too. But if they know what's going to happen next, they're less likely to hire an attorney because they lose. You hire an attorney, they're taking 20% off the top and usually don't do any work to deserve it. Here's an example of that cheat sheet for North Carolina. I have it for most states. This part's really important. Investigating accidents, freeze the facts. I can't tell you how many times as a claim adjuster, stories changed over time. The relationship between the employee and the employer changed. Memories fade. So document things. So let's go over some of these. And again, I'll share. These are all in this flash drive. And I was the guy at the booth at the convention peddling flash drives, saying, hey, well, I'll mail one to you. And it had all of this stuff on there. It was back in March. Why not have the injured worker, when practical, fill out a report like this? I call it freezing the facts. They are going to, when practical, maybe not right when they're injured, but a day later, lock in their version of what happened. Sign it, date it. I've got it in English, Spanish, and Polish. So they can't say, I didn't know what I was filling out, lost in translation, blah, blah, blah. It even makes comment to your ability to take someone back to modified duty, okay? So because I do see caregivers go to a doctor and say, unless I'm 100%, I can't go back to work. So happy to provide these to you. They're Word documents, you can change them to make them your own. Here's one to fill out from a supervisor. So important to get supervisors involved, especially important, we all have video cameras on our phones. If you have an injury at someone's house, I'll give a great example of where a client of mine failed and a insurance adjuster failed. We had a problematic employee who alleged she slipped and fell on a loose rug. This is a client of mine in New York. Nobody went out to talk to the client who was of sound mind. Nobody went out to look at the rug. And the adjuster didn't ask either. And she accepted the claim, and $20,000 into the claim, I find out about the claim. I get involved. My client in New York talks to their client who said, oh, I don't remember her slipping and falling, and she couldn't have. That rug is glued to the floor. So I recommend your supervisor fills out this form because, again, relationships change, memories fade, okay? Document that to jog their memory. And unfortunately, I've had ex-employees be hostile witnesses, but then also take the next step and go to the client's home, get photos, just to solidify your investigation, get involved. Don't just take your employee's word for it. Just get out there. I had one where the person said they slipped on oil in the parking lot, and there was oil in the parking lot, and we did at least confirm that. And here's a witness form, which could be the client, which could be awkward, but it's something else to have. Timesheet, really quickly, the idea behind this is, and if it's practical, the spirit of this is, so many people get injured on the weekends and they come into your office on Monday and say, hey, I was hurt on Thursday or Friday last week, when they actually get hurt themselves playing softball or moving some furniture at the house. Again, I've got an example, is like it's on that flash drive. If there's a way for you at the end of the week, weekly, to have some way for the employee to sign off, I had a safe work week. They can't come in on Monday and say, I got hurt last week. It happened to me so many times as an adjuster. But also, you may terminate them 6 months from now, a year from now. And this happened again as an adjuster. I would hear from an attorney saying, we represent so-and-so. Talk to the employer like, we don't have any record of any injury happening. If you have an employee that signs off on something like this, it doesn't have to look like it, but somehow if you can figure out a way to have them do that, this alone can get you to deny a claim. I have an adjuster deny a claim if you could prove the worker said they were fine when they left for the weekend. And this really holds up. I love it, but it's easier when all your employees are under one roof and they're leaving, they're coming and going from your office. It's a little harder for your industry. Get those claims reported. We talked about it before. There's no reason to sit on those claims. I've seen people try to pay their own claims, think it's going to help with their premiums. And then next thing you know, the person needs an MRI, they need a surgery. And then my client says, I got to give this claim off to you. It's now become a $20,000 claim. And then that claim goes to the insurance carrier, and they do track when the injury happens and then when you report it. And so nothing good happens. And again, if you're not turning a claim in, that means who's paying the injured worker? Who's paying the bills? They're going to get an attorney because they're afraid. And it doesn't give the adjuster a chance to, again, memories fade, relationships change. It's hard for them to do a proper investigation. So, and this is when I got into sales, I started with Liberty Mutual in 2008. And I joined Lamb Little in 2009. Liberty Mutual put the slide together showing what happens. This is their own data. The longer you sit on a claim before it gets reported to the insurance company, look at the increase in cost. Okay, we're getting close to the end. Let me just talk about this. Love your claim adjuster. It's important to know how many claims an adjuster has. If it's more than 125, it's too many. You can't look at every claim every month. 3-point contact, when you report the claim to the insurance company within 24 to 48 hours, you'll hear from the adjuster first, then they're going to call the injured worker, then they're going to call a doctor's office. When they're done with that, now they know this person's going to be off of work, they need a surgery, we're going to reserve the claim. We're going to put aside $10,000 for medical treatment. We're going to put aside $2,000 for lost wages. We're going to put aside $5,000 for a permanent injury award. Okay, that's what happens right after the insurance adjuster finishes talking to everyone involved in the claim. If you don't hear from someone within 48 hours, there's something wrong. It's important to understand the financial rating of the insurance carrier. There was a carrier called Guarantee Insurance that went belly up like 3 or 4 years ago, unrated insurance carrier. I don't work with any unrated work comp carriers. That means they're probably not financially stable. And people that were Guarantee Insurance were left scrambling at the last minute, like, how do I replace that? I only work with insurance carriers A- or better. So it's important to understand that, because the lower the rating, the service is going to fall in line with the rating of the insurance carrier. You're going to have poor service. Medical only versus indemnity. We talked about the importance of why you report those the right way, okay? But what you also need to understand is when you report a claim as a medical only claim, it might go to a department that is not going to call you. A lot of insurance carriers, all they do is process bills as they come in. So it becomes a problem when your employee needs to have therapy authorized and you've never heard from an adjuster. So it's important for you all to know when you report a claim as medical only, do not be surprised if you don't hear from anybody. But if you know something needs to be authorized, you need to be proactive and reach out to the insurance company for someone on their end to approve that. And if it's not medical only, it goes over to an indemnity adjuster. Usually medical only are low-level employees that are maybe being groomed to learn how to take on harder claims, which is indemnity claims. Quickly, special handling instructions. You don't have a lot of say in whether or not a claim is settled or not. It's the insurance carrier's decision what they do. But why not see if you can get a dedicated claim adjuster? Why not see if you can be notified if the reserves are going to go over a certain threshold? I like $25,000. If they're going to bump a claim over $25,000, please let us know so we're not surprised. But also, yeah, trying to have one adjuster is better than having 4 different adjusters handling 4 different claims. But also, please, the insurance company settles and you find out when you get your new experience rating and your premiums have gone up and it's a year later. I hate that. I hate that. Again, return to work. You keep them motivated. It will save you in your work comp premiums. But to me, it's got to be practical. Don't pay someone to do nothing. Make sure you're getting something out of it. Don't just do it to appease the insurance company. If it doesn't make sense, do not do it, okay? It's probably gonna be worth paying a little bit more in premium then, okay? Post-offer medical questionnaire, we got a few more slides and we're done. The post-offer medical questionnaire is, what we've noticed is a lot of caregivers are older caregivers, 60, some 70-year-old caregivers. I'm 50 years old. I've had so many basketball-related injuries. I need a knee replacement. So many people have degenerative problems. The idea behind this post-offer medical questionnaire is you got to do it on every employee you've offered a job to, even if it's an office worker. You want to have them fill this out. And the goal is, all right, based upon their responses to this questionnaire, they can do the job we're hiring them for. Maybe we need to put them with a different client and modify the job that we hired them for, option 2. Option 3, make sure I keep these other fingers up so I don't flip you off. Option 3 is we can't hire this person. Another thing that could happen from this form is you might take that person and send them to a clinic for a post-offer physical. That would be a cost to you, but might be a worthy cost. A couple $100, it could prevent you from having a $50,000 claim. So again, all these things are on a flash drive. I think it's so important. All right, we're almost, I think 3 more slides. Claim reviews. So let's say Zach's policy starts on January 1st. What happens is July 1st, 6 months into the policy, all of Zach's insurance companies are going to send in all of his audits from his work comp audits and all the loss data to NCCI at the 6-month mark, not 3 months, not 4 months, not 5 months, 6-month mark. Usually between the 6th month and the 8th month, they calculate what your experience rating is. Then you'll get a letter from NCCI saying, hey, go on this website, pull your experience rating, it's ready. And it's usually 4 months before your policy's over, okay? So you want to do claim reviews. You want to get the reserves down or claims closed. That's why you want to do it. When you want to do it, when you want to do it is that 4 or 5 month mark, okay? Because if you start the process 4 months into your policy, it gives you 2 months to go back and forth with the claim adjuster, trying to either close claims or get the reserves down, okay? If you do it at the 7th month or 8th month, it's done you no good. And you can't go backwards, just like you can't go backwards from indemnity to medical only. And then who's involved? It's always me, it's my client, and then probably their staff, and it's the claim adjuster, and sometimes their supervisor. And the goal is we want to all be on the same page. We want a definitive plan of action from the claim adjuster, holding them accountable for what they're doing. And if we do that, then hopefully we can get a couple claims closed or get the reserves down. Okay, I don't see any questions. Last 2 slides, nurse triage. We use a service called Coventry. We're starting to see more and more insurance companies use nurse triage. And the theory behind nurse triage is we're trying to prevent sprains, strains, soft tissue injuries from becoming full-blown work comp claims, okay? So What happens is you'll call in to a nurse with the injured worker, and they're going to ask a lot of questions to the worker. And maybe 3 questions in, the nurse is going to cut you both off and say, you know what, based upon your symptoms, you need to go to a clinic right now. Okay. But what you're hoping happens is for every 10 of these you go through nurse triage with, 3 or 4 of them never make it to the insurance company as a claim because they could be self-treated, self-care, first aid instruction. So we don't get compensated for this. Only a couple of insurance carriers I know have this built into the cake. So what that means is when you're calling a claim into the insurance company, the few that do this, you're actually talking to a nurse first. And if you get through the nurse and she's like, you know what, we need to file a claim, you go right to claims, then you file a claim. Or they say, you know what, why don't you take 2 ibuprofen and ice down your knee or your back, and I, the nurse, am going to call you back tomorrow or the day after and check in on you. The goal is let's get 3 or 4 out of those 10 claims off the claim adjuster's desk. You will save money. The last I remember, it was $85 a case, not a call, but the entire case. And I have the paperwork if you want to get signed up. You deal with them directly. We're not involved. We're not paid a penny. It's just it's a way to prevent unnecessary claims from hitting your experience rating. And lastly, parking lot accidents coming home from work. The one thing I'll say to you all is that most states find that your caregivers are considered traveling employees, okay? So they're protected when they're injured, driving to and from a client's house. If they're going to, if it's an office worker going to and from their house to your office, different story, less of a, it's more of a gray area. It's less gray though when they're driving to and from work. So don't assume because they're clocked out that they wouldn't be covered if they had an accident on the way from home from work. It doesn't happen often, but just be aware of that. But also, I've had a couple situations where I had an office worker who knew she was going to be probably terminated from her job, and her uncle is an orthopedic surgeon. She faked an injury in the parking lot, broad daylight, perfect weather like it is today, and we turned the claim into the insurance company. The client took photos. There's nothing wrong with the parking lot. And what happened was we turned the claim in. The insurance company fought and fought, but eventually said, we're going to cave a little bit. We're going to give them $2,500 to go away. They call it a nuisance amount. But what would have strengthened our defense is if you see up here, a camera. If we could have put 2 and 2 together, no defect in the parking lot, and we don't have any evidence of her falling, they would never have offered the $2,500. So my suggestion to you is that if you don't own your building, which most of you, a lot of people don't, ask your landlord, can we install at our own cost or whatever? It's cheap. And that will be helpful. I've probably had 4 or 5 parking lot claims. That's it. Again, kind of short notice. This is me. That's my email address, dpowers@inzoneins.com. Would love to talk to any of you. Again, that flash drive has a recording of this presentation between me and Gary, my partner here. And then also we have an Insurance 101, Know Your Exclusions presentation. It's so important to know what COVID has done to the insurance marketplace. And then all these other things I've shown you are on that flash drive as well. Zach, that's it. I'm done. I'll stop share. Are you guys all still there? Did you all fall asleep?
No, I'm still here, but there is a lot of content, and one can't appreciate you enough for stepping in there and filling in and giving us all this content today. And a reminder to everyone that this is recorded. If you missed anything, we'll be on the Asnaha website at that same time. We have opportunity for questions right now. Does anyone want to jump in and ask Dennis a question?
No question, but certainly, Dennis, great presentation, really good content. You covered a lot of ground in that.
Yeah, a little too fast. I'm sorry.
No, it's okay. It makes you
the bladder dictates it.
but very good. Thank you.
Thank you so much.
I
And
know
Dennis,
there were-
I'm gonna send out an email to everyone that had originally RSVP'd to this session and let them know that it is very valuable content and to watch it on our website.
Yeah, I can do a deeper dive on the experience rating. If anyone ever wants to have their experience rating worksheet analyzed, I can do that offline. I'm an expert at that. I can show you what your best EMOD could be. I can show you what your next EMOD is going to look like. I can forecast. I can tell you if you got competitive rates. I can tell you the financial rating of your insurance carrier too.
That's excellent. I do have one quick question. I don't want to hold you up too much longer, but I know there was and I don't know, I wish I remember these specific details around what happened with us, but I had a caregiver get injured. She tweaked her back. We did the workers' comp claim. She got her therapies, time off, missed wages, etc. And then she was put back by the doctor to work, and the insurance kept paying, which was obviously hurting our mod quite a bit. And there was really no way for us to ever reconcile that. So we got hit pretty hard on something that should not have happened. It was the insurance company's fault. And at the time, the insurance broker or agent that we were working with said there was really nothing I could do. Is there any recourse for companies that kind of get screwed over by the actual insurance company?
I would lean more towards you can't put the toothpaste back in the tube, Zach. I think, but that's the reason why I now have those calls within the first week. I get everyone together so everyone's held accountable. And the biggest reason, Zach, what happened to you is the biggest reason I do that is because there's the claim adjuster is going to call you and talk to you 1 or 2 times. Then you won't hear from them. Too many times, both parties were paying the same person at the same time, okay? Because they're not communicating. The adjuster didn't know that was a return to work slip. They didn't, and sometimes it was a fault of my client not giving that return to work slip to the insurance adjuster. So you might be able to ask NCCI. You can, here's an email address. You got nothing to lose by doing this. It's modmail, M as in Mary, O-D, M as in Mary, A-I-L, modmail at ncci.com. Give them your risk ID. If you look at your experience rating, or your experience rating worksheet, you have a risk ID number at the top. I'll show you. Just give me a second. I'll show it to you. Put it on the subject line. They will talk to you. And if that's who would have to do it, what would happen is they would say, you know what, Zach, that's a good, that's common. It's an error by the insurance adjuster, which it could be. And if they agree, so risk ID, it's up at the top right-hand corner. Okay, see that? You've got nothing to lose, everything to gain. You might not get what you want, but if you do that, they might say, yeah, Zach, we agree with you. Then if they do, you send that email to the insurance company, they're the ones that have to send something to NCCI to modify it. So they can't, there are errors on worksheets. Yours is more, it's not a clerical error on the worksheet, but I would argue, why not? Or if you were still with the same insurance company, I would say you really messed up. You need to offset this in my premiums. I want more credits. I want my premiums down. Give me a lower rate or more credits. That's what I would do. It happens. But again, it happens on both sides though, Zach, where you can't assume, both sides are always thinking the same thing.
Yeah, it just seems like the owner, like in a lot of situations, the business owner is always at the mercy, of these kinds of things. And then there's no real recourse if there is an error and it's not the employer's fault. Right. So we got penalized. They just collected more money from us based on them, increasing their mod and everything. But all right, well, the mod mail thing, I wrote that down. I'm gonna keep that as a resource. So thank you. Yeah, Any other questions? Any other questions or concerns for Dennis here? All right, well, if that's it, again, can't thank you enough for stepping in impromptu here. Do appreciate it. Very valuable to our members, and we appreciate everything you do for ASNAHA.
Thank
So
you.
thank you again. The ASNAHA Board of Directors wants to thank all of you for participating today. Our September session will be held on Wednesday, September 21st. Our speaker will be Chris Fry, Benefits Advisor and Independent Broker with Benefit Intelligence Inc. He will be speaking about working together to innovate a world of mental health well-being. Please make sure you RSVP for this important topic. Thanks again, everyone, and have a great rest of your afternoon.
Bye, everybody.